Hey folks, Dan Frio here, the Mortgage Update. Today is September 2nd, 2020. So I apologize about yesterday. I had actually a doctor's appointment. I had to leave early and it caught me off guard and I wasn't able to do my rate comparisons for the week. So that's what we're going to do here next. So don't go away. Okay, so what happened today with rates? Here's what's also blowing my mind. The stock market was up another 400 and something today, and it's starting to freak me out. And I'm going to show you why here in a second. So let's get to it. Well, you like this number here. I like this number here. Mortgage-backed securities. This is the bond that trades, that determines mortgage rates. It was up to, you might say, Dan, up. That's bad. No, folks. Green is good. Green means the price of the bond went up, meaning mortgage rates went down. It has an inverse relationship. As prices go up, rates come down. As rates go down, prices go down, rates go up. So that's what's going on here. So there's an inverse relationship with all this stuff. So we like when the number is green. That means the price of the bond is going up, therefore dropping the yield or your mortgage rate. So let's see the trend that's happening. And I still don't get it. And I hate to say it that way because I kind of try to pride myself on really tagging these markets and knowing what's going on. But guys, there's euphoria in the market, and I'm going to show you that in a second. Ride it while you can. That's the best way I'm going to put it. So pigs get fat, hogs get slaughtered. And I also have shirts on order. So I'm going to start giving them away every Tuesday. For anybody that subscribes, I'm going to do a drawing and send out the Frio t-shirt that is pigs get fat, hogs get slaughtered. Why I say that is, everybody tries to time the market absolutely perfect, and you can't. I have clients, every day that's applying for a loan. And here's what I mean by pigs get fat, hogs get slaughtered. They apply for a loan and their rate is 4.5. And I come back and say, I can get you 2.99. I just want to get a little lower. You're already dropping over a point or more in almost all these cases. And people just sit there and it's just like, well, I'm just going to wait for it to get a little bit, get a little bit lower. Okay, that little bit lower might save you another $4, $5, $8. And I'm a proponent of saving money, but if we're already saving you $250, $300 a month, is $305 worth risking it and throwing that money away month after month after month? So that's what I get. That's basically what I mean by pigs get fat, hogs get slaughtered. So that being said, the trend, and I apologize, I'm not locking anybody in. I'm riding this wave again. Hold on a second. Daggone it. Let me go backwards. Bear with me a second. I got to get back to the grid that I want to follow. And we go back to the basic line here. And it's a nice trend that we got going on here, folks. I don't know what's happening with my computer. Nice trend we got going on there. So we locked, people in here. We locked mostly everybody up here that we had, all new applications. They were either locked right in this time frame or we're just sitting on the sideline right now waiting for, this to take a turn. We're hitting some resistance levels and we hit that today and we actually broke through it. I think we're going to end the day right at this line because we were, at the beginning of the day, we were up here. Let me go through these numbers here. At the beginning of the day, we opened the MBS markets where we were down 3. Okay. And then we went up a decent amount. Actually, I think we were up like 9 or 10, midday. Where is it? And then some of the news came in. No, up 3. I know during the day we were up about 7, 8, 9. And I'm like, oh, that's pretty cool. And then we came all the way back down to 0. Now we're up 2 right now. What does all this mean to you? Basically, unless you're looking for a mortgage, really not much of anything. But those that are following this, either you're a realtor, you're a mortgage advisor, you might be a financial planner, or you're in the market to refinance or buy a home. And you're like, you know what? How do mortgage rates work? How are they determined? Is there just one mortgage rate out there? A lot of people call me and just say, okay, I know the rate today is X and what are your fees? That's basically what I'm shopping for. No, guys, you're shopping for everything. You're shopping for the rate, the fees, the whole ball of wax. So let me explain to you what's going on right here. This is the price of what's happening with mortgage-backed securities. Again, as I stated before, as the price goes up, the bond yield or your mortgage rate comes down. So we love when this goes up. And we try to time this market. Think of it as a stock. As the stock is rising, you're going to follow, and you want to sell it. So what are you looking to do? You keep following, and then it has a reprieve. You might have a sell order in right here saying, I'm going to ride this up. And then when it peaks, when is it peaking? Well, you don't really know until it's hindsight. So we follow all these trends. So that's what I'm trying to do. I'm trying to say, okay, I want to sell your stock at the ultimate high. In my case, I want to lock your rate at the ultimate low. Well, how do I determine that? Well, follow all this stuff and economic data and news and everything else. So let's get on to it. Here's what's going on with the bond prices right now. What's my expectations? I thought we were going to stay steady in this range right here. We're above that. Does that mean we're not going to come back down? Absolutely not. I still think we should be trading in this range right here. So I'm going to monitor this, and I'm not going to get it to be a hog. I'm going to monitor this, and when I see it take a turn, I'm going to lock in everybody I got, because this stuff's going to come to an end. And I'll get to that in 1 second. The stock market was up 454 today. Why? Employment numbers came in half of what was expected, so that wasn't it. The government is still bickering about the next stimulus package. That wasn't it. Manufacturing numbers really didn't do much of anything. That's not it. What is it? Well, guys, it's euphoria. Here's an index that Citibank created. It's called the Fear Greed Index, and this is basically with stocks. And I'll explain why I'm following this. Two investments out there, basically. Stock market, bond market. The bond market, part of the bond market is mortgage-backed securities, which are mortgage rates. Okay? Right now, everybody and their mother is buying stocks. And this indicates it right now. The market is extremely greedy, meaning everybody and their mother is in the stock market. When that happens, you usually have a pullback, and I'm expecting a correction any day now of minimally 5 to 10%. That's going to be a big drop. Hopefully I'm wrong, but I doubt it. And I'm probably going to be wrong a little bit on the when it's going to happen, but I'm not. I don't think I'm going to be wrong on the extent of the drop. So that being said, everybody and their mother is buying stocks. When this starts to crater, people are going to jump into bonds, and they're going to start picking up the demand for bonds, thus increasing the price, dropping the yields even further. So I'm expecting the bond market or mortgage rates to basically stay steady, but I think they're a little bit expensive right here too. And the reason being there is the Federal Reserve has stepped in, and they're doing everything and anything they can to keep rates low. Now, here's what I've been noticing in the last week is once the Fed came out and made some news about some things, everybody has this clickbait out there saying, oh, the Fed's major move is going to do this. Watch my channel and I'm going to explain it. Guys, it's really not going to affect you much, if at all. So watch that clickbait. I created a video off of that, basically telling you what their position has changed to. But in the short term, I don't really think anything's going to happen. We had a hiccup that day, and then we came right back into line where we were. So the economic news today was, what did the payroll numbers do? Well, we expected 950,000 people to be getting new jobs. We had 428. Bad news. Factory orders. We expected 6.1. We got 6.4. And they're not bad, but marginally better than expected. So between these two indicators, should the stock market have gone up 400 points? No. Then tomorrow we start seeing a lot of job information, and then Friday we start seeing the unemployment rates and the hours worked and the earnings for the month. I don't think we're going to see any surprises here. Even if we do, I don't think it's really going to change anything. It's the only thing that's going to change is when something does turn, this greed index is going to go back to people starting to fear. And when that goes to here, you're going to see a major pullback in stocks and people pushing their money back into bonds. Okay, so that's what's going on there with rates. And I forgot, I apologize. Yesterday I do my rate comparison, so I'm going to do that right now. So let's look at, we're looking at people that are going to refinance. So I picked in right here a $300,000 mortgage, and this is somebody with good credit and what we call a 75% loan to value. That means a 75% loan versus the value of your home. In this case, it's a $300,000 loan on a $400,000 home. They're not looking to pull out any money. They just want a lower rate. So I put that data in here. I have a 740 credit score. That's a good credit score. And I'm looking at a 30-year fixed. Here's my take on a lot of this. If you can get rates so low, why not leverage your money? And I'm not saying put any more money on your home, but leverage it. If you're paying a rate of like 2 or 3%, the stock market normally averages 8 to 10%. Why don't you leverage your money and put more money in the stock market where it's appreciating and growing and you have access to it versus prepaying your home. And then if you want to get the money out of it, it's going to cost you a couple $1,000 to refinance. That's my take on it. But that being said, that's the criteria. I'm going to hit it and let's see where rates are right now. Again, a 30-year fixed rate at that criteria. And we go in here and the 30-year rate right now with me is 2.875 is going to cost you $200. So virtually nothing. And I'll tell you what, I'll make you a deal. Anybody that watches this video and it reminds me, I'll give you a $200 credit. So you get 2.875%, no points, no discount points or anything. Okay, that's where I would be. I Googled it right before I did this and said, let's go to Bank of America and Wells Fargo. Those are the country's two biggest entities. You go to Wells Fargo, and I didn't manipulate anything. I just looked it up, looked at rates, and a refinance rate here, 30-year fix is 3.25. Mine is 2.875. Beat them. Bank of America, they are at, and it is a refinance. It says right up here, today's low refinance rates, 30-year fix, 3.25. Actually, that even has points, 0.7. Oh, my Lord. If you wanted to pay the 0.7 with me, you would be at 2.75. They're at 3.25. That's a 0.5% lower I have on rates. So that's my rates for today and for the week. So if you'd like my videos and you'd like to reach out and say, Dan, what can you do for me? Please go to therateupdate.com. That's therateupdate.com. You can call me personally at 844-775-5626. Or shoot me an email. I always tell people, you know what? Shoot me an email. Tell me the quote you have, and let's beat it. Let's beat it. My name is Dan Frio. So my email address is D for Dan, Frio, which is F-R-I-O. So dfrio@preferredrate.com. Here's what I ask everybody to do that watches me on a daily basis. If you're in the mortgage process right now and you have a quote, email me that quote. And what I'll do is I'll write all over it in red pen and tell you what I can do versus what you have. God bless you. If you can beat what I have, I'll be the first one to say, you know what, lock, load, go, and close. Probably 90% of the time I'm beating the other the competition on rate, fee, or both. And when I say that, I'm saying I'm beating them on rate. That doesn't mean my costs are that much more. It's basically, let's make it comparable. Their fees are X. Well, my rate is this. So with those fees, I can get you this lower rate. Flip-flop, I can get you that same rate, but lower fees. Most of the time, I have a lower rate and lower fees. So that's, in most cases, what does happen. So if you're looking to find out more about that, all I need you to do is just click here and do a rate quote. And it puts in some information. We'll get back with you within the hour and kind of pick your brain and see what you got. If you're looking to buy a home, click right here. But if you're in, like I said, if you're in the process and already have a pre-approval or a rate or a fee sheet or a loan estimate, and if you to that point, you know what I'm talking about, email that to me. I'll go through it with you and I'll say, you know, got it beat. Let's get this going. And all I need you to do is just let me know. We'll get you the paperwork started, lock you in, and get you to where you need to be. So that's all I got for you today. We missed my 10,000 subscribers. I need your help, guys. So we ended the month at 9,700. I'm 300 short, and we're getting about 30 or 40 a day. So I need your help. That's all I ask. Is if you like the video, give me a thumbs up, subscribe down below, It helps me get the word out to more and more people. Hit the bell so every time I do post a video, you get an alert. I try to make the titles as straightforward as I can. They're not clickbait. So if you see a title that you're like, man, that sounds interesting, you go ahead and click it. If it's something you have no interest in, don't click it. That's all I got to ask you. So that's it for today. God bless you. Sorry, I did my Tuesday rate review on Wednesday, but better late than never. So take care. God bless. Have a great night. Be safe. See you tomorrow. Bye-bye.